Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply stocks, and I'm live. I'm here with another video, and this time this video corresponds to a consumer food oriented company that is now coming back into reckoning with its price movement. So we'll discuss about that. It is a smaller mid cap company that I'm going to talk about, plus a little bit about the markets. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should deal with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSC and BSC, and that I am not a portfolio advisor. Whatever discussions I have with respects to market or portfolio or stocks is purely on the basis of my experience into the market over the last 12 13 years, and whatever decisions with respect to investments or trading you take, kindly take that on note that it is laden with market risk, and do consult your financial advisor before doing that. Now, before I talk about this company, here's a small request that kindly support me on Patreon and on WhatsApp or on YouTube. Once you do that, it will help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. I'll make better videos on YouTube, access to my portfolio. You'll have analysis on different companies that I bring to you. One long-term pick every week. On weekend, I do bring for you updated watch list that I keep updating every 15 to 30 days, and answer to whatever queries that you're having. So you can become a yearly member on WhatsApp or a monthly member on YouTube or on Patreon. You can check that out. The link will be in the description. Now, in order to discuss about the markets, let me take you to the Trading View website. But before I do that, I want to tell you as to which company I'm going to talk about. I'm going to talk about Devyani International Limited, a very interesting company that had been in the doldrums for quite some time over the last few months or so. It has been falling, and over the last 3 years hasn't done much, and has been, you can say, consolidating. Even on a 5 year basis, it has not done that much since its, you can say, IPO. Although it is up somewhere around 70-80% over the last 4 years, but that's just nothing compared to other companies. So we'll discuss about that. But first, let me take you to the TradingView website, and we'll discuss about the Nifty per se. The Nifty is down today, a 0.5%, and we are at 23,500. We have broken the 200 DMA, and we are right now very much in a position where we could go down even further. The 200 DMA as it stands is around 23,750, and we are currently at 23,560. If we look at a 5 year chart of, you can say, there's a weekly chart here. Again, the 200 day is around 23,900, so that's around 23,900, and we have broken that, even the 200 week moving average. That's what I'm talking about. So in a real bear group is the market. If you look at it on a weekly basis as well, we have fallen to an RSI of 44 45. That purely means that at the moment it is the best time to accumulate companies over the next 1 month, 1.5 months, for the year ahead. I think in the next year or so, next 18 months, we could be hitting that 29,000, 30,000 mark on the Nifty. I'm pretty confident about it. If you look at it, the market may go down if I again make it a daily, you can say, chart of the Nifty. If you look at the daily chart of the Nifty, then you'll have an understanding that we are at around 23,000. As I mentioned, we are at around 23,560. We could go to 23,000 levels. That is a possibility that we could be headed towards 23,000. If you look at that election, and I have kept on saying this, election day high was around 23,180. There's a possibility we'll go there. If we breach that around 22,500, there's a, you can say, uh, there's a strong, there will be strong support, because at 22,500, uh, if we say 1100 rupees EPS this year, that's what I'm penciling in. will be trading at 20 and a half times, which is extremely interesting, which will not be, you can say, expensive. And if I take 11 or 12%, you can say, rise on this value till FY26, a growth rate of around 11-12%. Then at 1225 rupees, at around 20, around you can say, let's see, if we are at say 22,500 based on 1 year forward earning, we'll be trading at around 18.4 times, extremely reasonable. So I think another 1,000 points maximum downfall possible on the Nifty, and similar falls on a small and mid cap. But I don't see much more downside. In the same vein, I want to tell you about one of the companies that are doing the rounds, and that is Devyani International, 22,000 crore market cap currently in losses on a yearly basis. If you look at it in terms of numbers, it has not done that much, and around 10 crores of loss last time around, with a lot of, you can say, taxes, etc. So we'll talk about the numbers. Let me just give you an idea, very brief idea of the company. So Devyani International is the largest franchisee of Yum brands in India, and is among the largest, you can say, operators of the chain. And the company is a leading quick service restaurant QSR operator in India, and is part of the RJ Corporation. So that's what it is. Uh, it has successful ventures in beverages, Varun Beverages, QSR and KFC, Pizza Hut, Costa Coffee, retail in ice cream, Cream Bell, etc. So that's what the company is into, the RJ Corp, and one of their business is Devyani International. So their core brands, 82% of their revenue comes from, it is the largest non-exclusive franchisee of Yum brands in India, with the franchisee for Pizza Hut and KFC. Additionally, it is the exclusive franchisee for Costa Coffee in India. The segment revenue grew 62% between FY22 to FY24, which is pretty good. International business is around 12% of their revenue. So basically, KFC, Costa Coffee, Pizza Hut. Pizza Hut is lagging behind, you can say, Domino's, but KFC and Costa Coffee is doing well. Having said that, the margins have decreased over time. So if you look at the numbers, per se, then their sales have grown. So if you look at it, sales in FY23 was around 3,000 crores. In FY24, it grew to 3,600 crores. That's around, you can say, a 20% growth. And then again, 4,300 crores is expected this year. In fact, they have done around 2,400 crores already. I think they'll do around 5,000 crores this year, which is extremely good, that the sales have is growing and growing big time. They grow the sales by around 40% this year compared to last year. But look at the margins. Margins last year were around 18%. Before that, it was around 22%. In FY22, the margins were 23%. But now, over the last 2 quarters, margins have dipped to around 16.5% or so, 17.5 here and 16% here. So around 16.5% is the margin. So if I take 16% margin on 5,000 crores of sales, that's around, you can say, let's see. So 5,000 crores of sales with 16% margin is around 800 crores of operating profit that we are looking at this year. That's what we are looking at. Uh, Compared to 650 crores last year, which is a growth. So if you compare year on year, in FY23 they had an operating profit of 650 crores. FY24 was similar at 650 crores, but now they are going to do at the worst around 800 crores. And that is where I feel that the stock may perform, because it has not done that, because the sales are growing the sales are growing pretty much. And so if this margin expands a little bit, 16% margin is perhaps the lowest that it has gone to over the last, you can say, 5 6 years. I think the margins should sustain around 15-16%. uh, that entails that we are looking at a situation where the stock could move higher, because uh, profitability is not there. If you look at it, Profits are not there even with 195 crores. So say this is because of the interest burden and depreciation that we are seeing. But depreciation should go away in the next year or so, and eventually will end up having a situation where net profit would also come in. But the way the sales are growing, things are looking much brighter for this space in a very difficult environment. That's Devyani International. I cannot pinpoint as to what the numbers could be because we need to see when the company turns profitable again. But numbers are going in the right direction. In terms of shareholding pattern, promoters hold around 62-63%. FI holding has grown actually from FY22, which was around 7% to around 11%, although it has dipped in the last 2 quarters. But DII holding has increased in the last 2 quarters, and public shareholding is around 10.7%, which is a very good sign that over the last 3 years, public shareholding has gone from 24% to 10%, in which 2.9% is with large investors out there. So public shareholding is only around 8%, or free float is only around 8%. So overall, very strong company, Devyani International. I believe that in terms of price movement, once it gets past its all-time high of around 230 or so, it should move higher from here. Since its inception, it hasn't done much, so we are looking at a much better, you can say, move here, trading at only 4.5 times sales. So if you look at from price to sales basis, trading at 4.5 times sales is a steal, Devyani International, at these valuations. So this was a video on Devyani International as well as the markets. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.